Assalamualaikum and hi Prof. Madia, Dr. Saiful Hafizah Zaman and friends. We are from Group 15 and today we will be presenting a comparison between Affin and RHB Bank to see which one is financially healthier.
My name is AMIRA BATRISYIA binti ZAWAWI and my matric number is A203075.
My name is HIDAYAH binti AZIAN and my matrix number is A200686.
Assalamualaikum, hi. My name is ANISAH binti SAZUAN.
Hi, I am AMIRA SHAZIYANA binti BUKHARI with metric number A202388.
Hi, my name is ERINA SHAFIAH binti AZIZ, metric number A202725.
Hi, my name is FATIN binti ABDUL, metric number A202983.
Hi, my name is NURFARRAH with matrix number A204077.
Affin Bank Berhad was established in 2001 and operates in the financial services industry. Its main business activities include Affin Islamic Bank Berhad, which provides Islamic banking services, Affin Huang Investment Bank Berhad, which focuses on investment banking, and Affin Money Brokers Sdn Berhad, which offer money brokerage services. The top management of Affin Bank consists of Datuk Wan Razli Abdullah bin Wan Ali as the CEO, Ms. Joan Rodriguez as the CFO, and Encik Risham Akash bin Kamarzami as the COO.
Here are Affin 30 largest shareholders.
On the other hand, RHB Bank Berhad was established earlier in 1997. It also operates in the financial services sector with three core areas: Group Community Banking, which serve individuals and small businesses, Group Wholesale Banking, which caters to corporate clients, and Group International Business, which handle RHB overseas operations. RHB Bank is led by Datuk Muhammad Rashid Muhammadi as the CEO, the CFO is Encik Muhammad bin Rastam Shahrum, and the COO is Encik David Chong Min Liang.
Here are RHB 30 largest shareholders.
Let's take a look at the annual net profits of Affin Bank and RHB Bank over the past 3 years. In 2022, Affin Bank had a strong performance with 1.27 billion in net profit, but in 2023, that dropped sharply by nearly 80% to 251 million. There was only a slight recovery in 2024 with a 0.64% increase. In contrast, RHB Bank saw a more modest decline of 18% in 2023 but bounced back strongly in 2024 with a 42% increase reaching 2.89 billion. This indicates better overall stability and recovery by RHB Bank. Here's a quick look at Affin Bank revenue breakdown from 2022 to 2024. Commercial banking remains the main source, though its share dropped from nearly 93% in 2022 to 86% in 2024. Meanwhile, investment banking is growing steadily, up from 7% to over 13% of total revenue. Other segments remain minimal. Overall, the bank is seeing a shift toward more diversified income streams. This slide breaks down RHB Bank's revenue by segment for the years 2022 to 2024. Community banking continues to be the largest contributor, growing from 4.04 billion in 2022 to 4.32 billion in 2024. Wholesale banking saw a dip in 2023 but recovered well in 2024, reaching 3.56 billion. International business steadily increased its share, growing over 23% from 2023 to 2024. Insurance revenue peaked in 2023 and then declined, while support center and others shows increasing negative figures, likely due to the internal adjustments. Despite these fluctuations, total revenue grew from 7.77 billion in 2023 to 8.6 billion in 2024, showing a strong overall performance.
So for the asset, the total asset of Affin Bank on the year 2024 is 67.877 billion, for 2023 66.727 billion, for 2022 55.499 billion. The trend for each year is there is an increase by 1.72% on 2024 and there is an increase by 20.23% on 2023. The main source of fund is cash and short-term fund and deposit and placement with bank and financial institution. The main use of fund is loan, advance and financing, financial investment at amortized cost, and financial investment at FVOCI.
Now, I will analyze the total assets of RHB Bank over a 3-year period. Firstly, in 2022, the total assets stood at 214.9 billion. In 2023, the figure rose to 229.61 billion, where there is an increasing trend in the total assets of 14.7 or 6.84%. By 2024, total assets further grew to 243.92 billion, marking a trend increasing of 14.31 billion or 6.23% increasing. Now, moving to main uses of fund, number one is loan, advance, and financing. This is the largest component, accounting for more than 56% of total assets each year, it representing the core income generating activity of the bank lending. Second, in financial investment, this include financial asset at fair value through other comprehensive income, FVOCI, and amortized cost. Both categories have shown growth where FVOCI increased from 32.99 billion in 2022 to 43.07 billion in 2024. Amortized cost also rose slightly from 18.26 billion to 18.93 billion. And number three is cash and short-term fund. This component has shown a fluctuating trend. It stood at 11.49 billion in 2022, dipped to 10.31 billion in 2023, and then rebounded significantly to 13.32 billion in 2024 with an increase of 28.2% and signaling stronger liquidity. And number four is deposit and investment account. This declined from 15.09 billion in 2022 to 12.68 billion in 2024 with a 15.8% of drop. This suggests a strategic shift towards higher yielding assets like loan and long-term investment. And then for main sources of fund, although this analysis focuses on asset, they are mainly funded by customer deposit, offering a stable base for lending and investment. Additional funding comes from interbank borrowing, market income, and lastly, shareholder equity to support growth and also absorb risk.
Moving on to the total liabilities of RHB Bank, in 2022, they recorded a total liabilities of RM 192.03 billion. In 2023, RM 205.53 billion, while in 2024, RM 218.909 billion. After analyzing the trend of the total liabilities, we can see that from 2022 to 2023, the company's total liabilities increased by 7.03%. This indicates relatively strong year of liability growth. However, from 2023 to 2024, the total liabilities increased by 6.51%, which is less than 7.03%. Although it is still positive, the growth rate slightly decelerated compared to the previous year. After that, the main concern from the liabilities is the deposits from customer. This is because the deposits from customer is actually the largest liability by far, as at RM 155.1 billion, it makes up about 71% of the bank's total liabilities, which is RM 218.9 billion in 2024. Also, it is highly liquid and volatile. This means that the loss of customer confidence or market instability could lead to a bank run or severe liquidity stress. Finally, it is critical to the financial stability. Here is the bar chart of total liabilities RHB Bank trend over time. As we can see, from 2022 to 2023, total liabilities increased by RM 13,491,879. From 2023 to 2024, the total liabilities increased by RM 13,383,984. The total liabilities increasement percentage in 2022 to 2023 is higher than total liabilities increasement in 2023 to 2024 by RM 107,895.
Next, let's take a closer look at the total liabilities of Affin Bank from 2022 to 2024. In 2022, the total liabilities stood at approximately RM 45.8 billion. This figure saw a significant increase in 2023, reaching RM 56.8 billion, which is an increase of about 23.9%. This substantial growth could be attributed to various factors such as an an expansion of loans or funding sources, increased bond issuance, or rising operating costs. It may also signal strategic investment or acquisition funded by liabilities. However, this sharp increase raises a key concern for 2022 to 2023, whether the bank can manage and service its increased obligations sustainably. Moving on to 2024, the total liabilities rose more modestly to 57.7 billion, reflecting a growth rate of only 1.59% compared to the previous year. While still an increase, this lower growth suggests a stabilization of funding needs, possibly a shift towards internal funding sources or a more cautious approach to borrowing. This lower growth from 2023 to 2024 is our main concern for that period. It might indicate tighter market conditions or more challenges in expanding business operations. However, it could also reflect a strategic internal consolidation phase. This chart visually represents the trend in Affin Bank's liabilities over the 3 years period from 2022 to 2024. As shown, there is a clear upward trajectory in total liabilities. The steep rise from 2022 to 2023 reinforced the earlier concern about fast liability growth, while the smaller increase in 2024 suggests a potential shift in financial strategy. This trend helps us understand not only the scale of the bank's liabilities, but also the possible implications for financial stability and future planning. Understanding this trend is essential for assessing the bank's financial health and its ability to manage risk effectively in a changing economic environment.
Next, we will look into the main type of financial for both banks. We will start with Affin Bank Berhad first. From the table shown, we can observe the total assets, liabilities and equities together with the percentages of liabilities and equities for year 2022 until 2024. The table shows that the total liabilities for all 3 years are always greater than the total equities. This then brings to the liability equity ratio to be big, as the ratio for year 2022 is 4.7, while the ratio for year 2023 and 2024 are both 5.7. Since the ratio is high, it signals the company is highly leveraged, which conclude the main financing type as liabilities dominant for all 3 years for Affin Bank Berhad. Now, we will move to RHB Bank Berhad. Like previous slide, from the table shown, we can observe the total assets, liabilities and equities together with the percentages of liabilities and equities for year 2022 until 2024. The table again shows that the total liabilities for all 3 years are always greater than the total equities. This then brings to the liability equity ratio to be big, as the ratio for year 2022 is 8.4, while the ratio for year 2023 and 2024 are 8.5 and 8.8 respectively. Since the ratio is high, it signals the company is also highly leveraged, which conclude the main financing type as liabilities dominance for RHB Bank Berhad 2 for all 3 years. We can see that both banks carry the liabilities dominant as the main financial type. This is a normal case for financial service industry, since they usually carry larger liabilities value compared to equities.
In comparison, RHB Bank is financially healthier than Affin Bank in both 2023 and 2024. It has stronger profits, higher revenue, and better efficiency. While Affin Bank is growing, RHB Bank remains the more stable and profitable institution overall.
That's all from us. Thank you.